Well, a very good morning, good evening, and good night to you, wherever you may be listening to this podcast. My name is Mark. Thank you for tuning in. So, we have gotten so many reports from so many different sources, whistleblowing the fact that apparently a lot of banks are in big trouble. So, many of these sources that have came out to whistle blow on that matter actually refrain from actually naming any banks by name in particular. However, somewhat of a broad generalization was made, which to me kind of signals that this banking crisis that is impending is probably not just going to hit one bank, but it's probably going to be a series of bank, if that makes sense. So now, to add insult to injury, we are getting a lot of consumer reports stating that they've been witnessing a lot of funny business when it comes to their banking relationship and their bank accounts. So several YouTubers have reported having friends and family members that have experienced said issues, amongst which is added fees on their bank statements. So let's say, for example, you have an account with XYZ Bank. So normally, your checking account would a specific fee tied to it. So what a lot of these banks have been doing now is that they've been increasing the checking account fee that you had initially agreed to. So if let's say they used to charge you $12 for having a checking account, so they would now bump it up to like $15. So that is one thing that they've been doing. So now on the flip side of that, so I've also heard that a lot of banks have been requiring a substantial deposit in order for them to waive that fee. So let's say instead of paying that $15 every month just for you to have an active and open account with them, so they would say, for example, if you maintain, let's say, $3,000 in the bank every month, or if you receive XYZ direct deposits, then we would go ahead and waive that fee for you. So that is the first thing that has been reported. Now, the second issue that a lot of people have been reported, maybe not so many, so it is that a lot of credit lines of credit, and loans, meaning that let's say if you have a loan and that money is just sitting in your account, or a credit line. So a lot of these banks have been recalling that these lines of credits and these loans as well. So let's say Joe Blow from wherever has $150,000 in credit line and it's just sitting there. So a lot of these banks have now said, hey, you're not using this. We are gonna have to close the account. So on the flip side to that, a lot of people have been, a lot of these banks have done so without giving a proper explanation as to why they are doing this. And many YouTubers have already categorized these series of events as an impending banking crisis that is looming. So I'm not gonna say whether it is so or not yet. And now the third problem that a lot of people have been experiencing, especially with credit cards, is that their accounts would just get shut off, or they would get hit with an inactivity fee. So an inactivity fee is a fee in which a fee that you get hit with for not using your credit card. So let's say you have a $3,000 credit card, a $3,000 credit limit with XYZ Bank, and or maybe you have other credit cards. For some reason, that credit is never used. So a lot of banks now are just shutting down these accounts, or hitting people with an inactivity fee, as I said earlier, for not using that card basically. Another issue that a lot of people have been having is with the withdrawal process. So withdrawal is when you go to your bank and try to get money out. So what they're doing now is that they are putting a certain type of restriction on the amount that you can withdraw from your own bank account. So for example, if Sally goes to her bank and try to get past, let's say, $1,000, some banks have started putting daily limit withdrawals. So let's say again, Sally goes to her bank to get that thousand. The bank might issue the money that Sally is requesting, but they might say, hey, you would have to wait another 2 to 3 days to take more money out. So it, from what I have read, rather, it seems like it varies from bank to bank. So so far, the highest number that I've seen is $5,000, and the lowest that I've seen was 1,000. So again, some banks would limit the withdrawal, the daily withdrawal, from 1,000 to 5,000, depending on who you're banking with. So this might be a good time to start asking or calling your banks to know. I mean, in the unlikely event of an emergency. And now the flip side to that has also been happening from what I was able to gather. Seems like that a lot of people who have been trying to make smaller withdrawals. Let's say you go to your bank, try to get $10 out of it. They would limit you, or at least charge you an activity fee for taking out of your bank account an amount that is so small. So somebody on an online forum today stated that they needed to withdraw $10 from their bank account, but they were gonna get charged with a fee. So what they had to do is withdraw a greater amount, take it in cash, go back into the line and make a deposit for with the difference that is. So let's say you needed $10. You would go to your bank, get the money, but instead of getting that $10, to avoid that fee, you would get, let's say, $500, and then you would go back in line and deposit $490, if that makes sense. So this is absolutely preposterous what we've been seeing now. And last but not least, a lot of people have been reporting no longer receiving statements or alerts from their banks or credit card companies. So for those of you that are unaware, a lot of times, let's say again, if you have an account with XYZ institution, before your due date comes in, they would send you a bill or a notice, a letter, or an email to remind you that, hey, your payment is coming up on such and such date. So now a lot of banks have shied from doing that now. So the reason is not exactly clear, as again, it wasn't really mentioned as to which banks have been doing. This is solely testimonies that I've gathered from different online sources. So I would not take it as the gospel as of yet. And on the flip side of that, I would not neglect the importance of it too. So this is why I'm making a vlog about this. So again, a lot of people have missed their reminders. So a result of that is once you miss the payment date, there are generally fees that are attached to it. So or even a late payment too sometimes, plus the interest. So all of these things have been reported by people like you and me, of course. So what can you do to protect yourself? So for those of you with money in the bank, whether it's a lot or not so much, there are a few things that you can do to protect yourselves. So number one is contacting your financial institution to know whether or not they are FDIC insured. Again, call up the 800 number, ask to speak to an operator, and ask them, hey guys, I have money with you. is my money safe? Are you guys FDIC insured? Can you prove it? It is not good enough that they tell you yes, but they can actually show you or email you I believe they have a certificate for some banks, and other banks have a mechanism by which you could go through the FDIC themselves to actually verify if the bank is insured. So it would not be a bad idea to also get on the phone and call FDIC or shoot them an email. I'm not sure that they have, I mean, whether or not they have a customer service line. So they probably do, since it is a government backed entity. You can never be too safe. So again, call up your banks, call the FDIC, ask them, ask questions, ask them for how much you're insured. And usually that amount is up to $250,000, which will bring us to point number 2. The second thing that you can do in the unlikely event of a banking crisis, for those of you that have more than $250,000, is to diversify. What I mean by that, so the FDIC will only insure to up to $250,000. So what I mean by that, instead of having a lot of money bunched up into one institution, so you might want to look into spreading that money around in various institutions. So it's probably a good idea. And again, this is not financial advice. This is just me relating to you what I would do in the unlikely event of a banking crisis. Again, spread that money around. You might want to start with the banks that are in your neighborhood. So take a drive, take a walk, and see which institutions are closer to you, and speak to them. Ask them the very same question that I've mentioned in point 1. Circle back to slide 1. Ask them, hey, are you guys insured? How much of my money will be insured? So again, you want to be diversified, as diversification is probably the best, or one of the best thing that you can do at this point. And avoid spreading it around in just different banks. So you might want to have a combination of banks and credit unions. So the way the FDIC usually works is that they would start with the biggest investor at 250 or more. So they would start with the big guys. They would repay them first. So by the time that they get to you, it might be a few months or so for you to get your money back. But if you deal with a smaller financial institution, so I believe that the chances are much likely are much higher that you will get your money a lot quicker than let's say if you're dealing with one of these huge corporations, because again, these smaller banks probably have fewer clients and fewer things that need to be sorted out, fewer portfolio and fewer balance sheets. So that's not necessarily a bad thing. And so when things like that happen, that is actually a very good thing. That is a plus, because again, it puts you ahead of the curve. It allows you to get your money a lot quickly than you would in a bigger financial institution. So now step number 3 is have some cash in hand. I think this should go without saying, but I do feel that we live in an age of convenience where cash is probably no longer appreciated as it was back then. But in times like this, I think it is imperative that a lot of us keep some cash in hand. I think I should also be the same, because like I said, cash is not really used anymore. So having an extra $150, somewhere in the house maybe, or somewhere safe, would not hurt you. So let's say the banking institutions are down or the ATMs are down. You have to go to the grocery store. You have to go to the gas station. Again, that would put you ahead of the curve, allow you to keep on keeping on while everybody's at the ATM or at these banks trying to get their withdrawals. The next thing that you can do in the unlikely event of a banking crisis is to fix your credit. So I know this might seem counter intuitive or counterproductive. So what I mean by that is generally in times of crisis, banking institutions will probably be more picky and more selective as to who they lend money to. So what I mean by that, again, during a financial crisis, most banks will not be as generous to or as forgiving to a candidate that has had flaws or again, having bad credit would probably be one of the worst things that you could do or that you could have, especially during a banking crisis. Because during said crisis, usually banks will look for reasons to deny you, as opposed to during the good times and when everything is going good. They would probably do the opposite. They would probably look for reasons to approve you. So it's usually two different mindsets predicated by circumstance. So the better the economic environment, the easier and the more forgiving lenders are. So the harsher the weather, generally that also reflects in the lending mood that the creditors have. So you might want to start with downloading one of these free apps or programs out there that allows you to access your credit reports for free. So you might want to download them and take a look at them and do a quick analysis and see how your credit is doing and what needs helps and what needs improvement. So I think that is the very first step. So try to get an analysis done yourself to see the actual health of your credit report. Number two would be to find any inconsistencies, problems with misspelling of your names, if your name and address, if they match. Look at the debt that is on your reports. Do you actually own that debt? Is it actually yours, or is it somebody else's debt, or is it somebody that you co-signed for, and so on? Are there any collection notices on your accounts? And if yes, is that allowed in the jurisdiction that you live in? And believe it or not, I believe there are some states that forbid collection practices. And for these states that it is not forbidden, there are usually rules in place which govern how these collection agencies they can actually come after you or report you to the credit agencies. And while you're at it, don't stop there. Take a look at the Fair Credit Lending Act. Get familiar with it. Read just a little bit every day. Try to see what is allowed and what is not allowed. Get familiar with the laws. Get familiar with the laws in the jurisdiction that you're in. And try to see what is lawful and what is unlawful. And based on that, you can also determine the right strategy to attack fixing your credit. And if you are busy and that is not something that you're willing to do, I mean, it is also okay to hire a professional or to hire an attorney who can help you do illegal legwork that you have to do. So paying an attorney $500, $1,000, $2,000 is probably peanuts compared to the benefits that you might get from that. So especially if your credit is in bad shape. So I would say the worse off it is, probably the more you probably need an attorney. And if it's not too bad, you might wanna ask for some advice, get some help. But you might be able to fix some of these things yourself, especially if you do not own that debt legally. So again, this is not legal advice. Do check with your jurisdiction and your legal professionals. They might be better informed than I am. So please do that. Again, if you do have debt, do pay it down, and try to see if you can have a payment plan, or at least try to get rid of that debt as quickly as possible. It is okay to allocate an extra, let's say, $20 every week, just so you could pay down any active debt that you may have. Again, remember, the more active your credit profile is, the better. And while you're at it, check for if you have family members. Do the exact same thing for your wife. If you know, for your ladies, or your husband. If you're married, for a significant other, for your parents. I mean, times like this, there's nothing like community power, of course. So I think, again, if your credit profile as the head of the household is lacking in some areas, having somebody else to come in to co-sign or to add you on to their trade lines, again, this will be very beneficial to you. So again, community teamwork or community coming together is probably one of the best assets that we can have during times like this. Now, another way to also protect yourself, circling back to what I said about the credit card problems that people have been experiencing. So if you have been getting your credit cards shut down because of inactivity, so one good thing might be that you start using them more often. So I'm not telling you to go out there and be reckless. No, I'm telling you the opposite. So try to see if you could go down to like a store, grocery store, gas station, buy a bottle of water, pack of gum, some candy or something, buy something small, charge an extra $5-10 on that card just to keep it open. Because in times like this, having your credit frozen or having your credit cards shut down is usually not a good thing. And also, the longer you've had a credit card, the better it is on your credit profile, as they call it a credit history for a reason. So if you've already had the credit established on your profile, taking it off is gonna hurt you significantly. So you want to have the opposite. You want to maintain the accounts. You want to keep them for as long as possible. And again, don't do anything stupid. Don't do anything crazy. Don't max out of your credit cards, as again, these would have an adverse effect on your score and profile. So you just want to go out, buy something that is cheap, something that you can afford to repay almost instantly, something that doesn't have to be put on a payment plan. Just go out, buy it. Create some minor activities on that card, just so that the banks keep the account active. So if you are having your reminders shut off, or the bank no longer sends you reminders or mail, just to notify you of your impending due date. So one thing might be that you start taking matters into your own hands. And what I mean by that is so a lot of you have cell phones now. Maybe most of us now have cell phones. I know, well, not all of us. There are still people that do not own cell phones, but for those of you that do, So you might want to go to your calendar app if you don't have one. I think there's a lot of them on the app store of the particular brand that you own. So go on that app store, get the app, the calendar app, download it, and now put maybe reminders 1 week off or 2 weeks off or so, just so that you remind yourself that hey, on such and such date I have a credit card bill that is coming up that I need to take care of. And again, it's probably not gonna cost you anything. A lot of these apps are free. Even if you had to pay for them, the savings that you would get from the from paying your cards, your balance on time would probably even outweigh the expense that you'd have made on that app. So again, take matters into your own hands. Go on and download these apps or go on your calendar app. Set these daily reminders or weekly reminders just to keep you on track with paying off your credit cards. So if you don't know your due dates, you can always go on your banking website. I think most banks now, if not all banks, are online. That information can be found on your statement, your credit card statement that is online. So once you log into your account with your username and password, it will give you all the details that you would need. So take your due date, write it down, and then put it somewhere that you can see, or put it into your calendar and get these reminders so that you can avoid these huge fees that you would have to pay otherwise. Again, get these apps, guys. Help yourselves, protect yourselves. So now one last thing you can do to protect yourself is to negotiate. And what I mean by that is that most people are not aware that in the banking world, almost everything is negotiable. So let's say you owe XYZ debt to XYZ Corporation, and it is oftentimes okay to actually call them and to negotiate, let's say, the interest rates down. Again, most people are unaware that you can even do this, but the process is usually not just picking up that phone and getting them to come down on the rate. So you would probably have to call them first and then try to see if you could speak to a manager in there, try to see if you could negotiate. 9 times out of 10, they will say no. So what you would do instead is take your statements and go to a different bank, a competing bank. And once you go to that different bank, you tell them, hey, I have such and such account with such and such bank, and these are my rates. Can you offer me something better? So especially if they want to acquire your business, and again, if the lending mood is not too bad where you're going, oftentimes, even if they are unaware to match the offer to the T or to give you something that is lower in terms of percentage, they would have extras to sweeten the deal. Now, for example, I know of a bank, I know of somebody who has done this. He had a $10,000 credit card debt. So he went to a different bank to renegotiate the terms for a new card. So now his interest rates were pretty low, so they refused. However, they offered him a checking account with a bonus, a sign-up bonus. So they might tell you that, hey, if you deposit $10,000, you would get an extra $500 with us. So that in itself may not seem much, but it is something. I mean, who would say no to an extra $500 just for opening up an account, you know? So again, it would vary from bank to bank, but if you do your own due diligence and if you, again, you interview these banks, don't be afraid. You go in, you ask to speak to the lending department or the manager that is on site. Again, try to get the manager, as almost always they have the final say in a lot of things. Get the manager and ask them to renegotiate, and again, 9 times out of 10 they will. So to take it even a step further, you could even get an offer from, so let's say again you have your bank with the debt that you have. You go to, so that's bank A, you go to bank B, you try to get an offer out of them. So what you might even do, so if you are really peckish, you might want to go to a third bank and say, hey, this is what I have, this is what bank B is offering me, so can you do better than that? So again, if they are craving your business, they will do everything in their power to give you something that is more attractive. And don't even stop there, keep it going, keep it as long as you're not breaking any laws. So do check the laws in the jurisdiction that you reside in, to make sure that you're doing everything by the book. So again, as long as you're not breaking any any laws, you should be fine. So again, go out there, speak to your own bank first, see what they can do. Again, especially if you've had your account for a long time, they would probably be more incentivized, especially if you pay your debts on time too. They will probably be more incentivized to keep you around. So take the offer that you have, the account that you have, go to a different bank and see if they could match it or give you something better, and take that offer and go to a different bank and see if they could match it or give you something better. So again, guys, keep that in mind. Nothing beats diligence, and nothing beats due diligence. So this is not a fear mongering channel. There's too many out there. If that is what you crave and if that's what you need, then this is not the right place. So again, we aim to be proactive and to educate ourselves and our listeners in the process.